The M2 money supply basically means it's the amount of money available within our economy that's able to be spent easily. So that's money in checking accounts, savings accounts, and CDs, basically the money sitting in banks, easily able to be accessed and spent on a short notice. So over the past 25 years here in the United States, we have seen the M2 money supply increase almost 5 times from what it was in the year 2000. Meanwhile, the population of the US has grown 17%. So, even though you might look at inflation numbers and say, well, inflation has averaged, like 3% over the course of that entire term, but the numbers, when you look at something like the money supply, would say something very different. And the reason for that is because the US is increasing the money supply and hiding it by changing some of those numbers in order to produce what looks like a better outcome. So they do this by the Fed lowering interest rates and also increasing the money by buying assets or simply, which is kind of akin to saying it's printing money. It's buying things without having any other money to purchase it with. They're basically creating that money and buying assets onto their balance sheet to increase liquidity in the market. So it's also increased by banks lending because they're also creating money basically out of nothing, and the federal government spending, which again, they really don't have a limit to their spending. So it increases, it puts a lot more money into the economy. They simply go out and borrow more money to fuel it. So the reason that that money supply is increasing is due to factors beyond our control, but as investors, we can use the knowledge of that to make informed decisions.